Hey, I'm Jeff Tarn, and you're watching Taking Stock.
Not getting any show cues here.
No, me neither.
How far to show? What's up?
All right, 2 minutes to go here into the closing bell on this Friday, June 26th. Major market indexes trying to stage a bit of a comeback here in the afternoon session. We will see what the final tail of the tape has to bring. Let's bring in the one and only Eric Criscolo to help us better understand a huge day on the calendar for brokers. Eric, guys down here were saying this is kind of our Super Bowl. This is Russell rebalance historically.
Yes, it is.
What does this mean, and what are we looking for on an afternoon like today?
Yeah, so the Russell is one of the biggest indexes in the United States. The Russell 2000 is a small cap index, 2,000 of the smallest companies by market cap. Every year they rebalance their entire index. So that means all the weightings, all the components that are in the index that a lot of ETFs have to buy and track, that all gets changed up at the very end of the close today in order to open on Monday with a brand new index. So the top weights, the bottom weights, additions, subtractions, that all gets done right at the end today.
Yeah, so the total volume, the breadth we see
Huge.
right now, it could go up a lot.
It's going to explode.
And just in this last 30 seconds, this last minute as the tape settles.
Yes, it's going to explode.
Yeah,
But it's all also known to happen. So everyone's pre-positioned for it. Everyone knows it's going to happen, but it is a giant volume day.
Thank you for the breakdown, my man. Time now for the closing bell here at the big board. There we go. And just like that, the market day, the trading week is done. Let's take a look at your final tail of the tape. The S&P 500 down. Oh, it did end in negative territory. Not by a lot, though. Only down 7/100ths of a percent. How about the Dow 30 down about 1/10? The New York Stock Exchange Composite Index in positive territory. Let's call it 3/10 or so for this trading Friday. And the small caps, that is the Russell 2000 we were just talking about with Eric there a moment ago, in positive territory, about 7/100ths of a percent. Dollar and volatility in retreat. Gold and silver moving higher on the day. And the oil benchmarks, the West Texas and Brent, back to their pre-conflict lows, trading back to late February. Healthcare, telecom, real estate, those are the big winners in the S&P 500. Meanwhile, tech stocks, which have been the worst performers this week, are, of course, the best performers so far in 2026. Really seeing rotation across the equities. Let's bring in our first guest, Tony Zaparo, CEO at Equity Set. My man, happy Friday. It is good to see you down here today.
You too.
So, you had a really interesting note, and we could talk about stocks and equities, and we will. How about we start with the tale of two economies? There are people for whom they are involved actively, they are engaged with this market, and maybe far too many Americans who are not. We're kind of using the word bifurcated again. What are you tracking there on that story?
Absolutely. And I don't think it's been a surprise as of late, but a lot of what we're seeing is the consumer is struggling a little bit, flatlining. Spending, again, surprised this latest period, but you've got ongoing debt, you've got stalling housing. But then on the corporate side, right, the AI CapEx, the spending, the growth story, that's what's really driving the GDP numbers, right? That's what's driving the markets. And again, decoupling from a lot of fundamentals that you've seen, we're kind of in that willy-nilly period where the markets are trading so much on hope and growth. Whereas again, the consumers, right, when retail FOMO gets kind of in the crux of the story, you got to wonder if it really aligns with the numbers.
Yeah, and the psyche of the consumer is interesting because you and I are having this conversation. Yeah. We did get the latest University of Michigan Consumer Sentiment Survey figures. Yep. Sentiment picked up for the month, which is good, but it picked up at the same time that we saw gas prices fall nationally about 60 cents a gallon. And I wonder what that correlation is. In other words, is our happiness as consumers, whether or not we realize it, kind of tied to what's going on in the Middle East right now?
Yeah, and that's off of all-time lows of the consumer sentiment,
Correct.
Which for a while it doesn't seem to matter, right, to the market itself. And so absolutely, I think you're running into potentially a stagflationary period. I know it's the dirty word, but obviously you've got the energy shock, oil prices rising, and you just got a struggling consumer, right, that's kind of maxed out in terms of debt. is really kind of trying to chase the train there. And so you're absolutely right, is like anything they can grab onto, right? Any gains, any savings, right? With energy coming down. I saw people posting in our local Facebook and Instagram groups about, hey guys, they're posting crude oil coming down the last couple weeks. They're like, but it hasn't moved at the pump. And so if that's any kind of story that you can kind of pull from, they're really hoping that a 10-20% pullback is going to save them money at the pump, which we know it doesn't necessarily work exactly like that.
Yeah, of course, we have what's called the rockets and feathers phenomenon. We see crude oil prices go up, gas prices tend to shoot up very fast in your local neighborhood. The opposite does not happen. It takes a lot longer for those gas prices to come down. Let's do some stocks. You like some of these beaten down names?
Yes.
We'll start with tech. Microsoft and Adobe down 23 and 42% respectively. What do you see or like there?
So I don't like the price action, but what I do like is seeing in a market that's really, I feel, decoupled from fundamentals, is you start to nibble, you start to pick them up. I mean, Microsoft alone over the last week, 2 weeks, down 10, 15, 20%. It's just getting hammered. Same with Adobe. What I like there is that when Reason comes back into the market and they look for earnings growth, right, and kind of it being bifurcated, right, in terms of value compared to where the price has gone, I think those are going to pick up substantially. Obviously, software, it had a bit of a rotation in capital today, right? You saw those names up 4 or 5%, which is more than they've seen up in a long time. So that's where I like those names, even though they're the laggards, and likely to get some more choppy waters.
Tony, really grateful for your time.
Thank
Look at
you.
this massive crowd of fans we have. Hey, can we give it up one more time for our special guest down here at the New York Stock Exchange? There we go. Yeah, why not? It's a Friday. I make up the rules. We'll talk to you soon. All right, here we go, Todd. Updated poly market odds for the World Cup champion as we head into the round of 32 this weekend. More than $3 billion in total trade volume on this poly market contract. As of today, France the favorite, 19% chance to win it all. The Lionel Messi-led Argentina squad, 15. Spain and England up next, at 14 and 10% respectively. Portugal, Netherlands, Brazil round out 5, 6, 7 after last night's 3-2 loss against Turkey. The U.S. sits at 3% odds to win it all. World Cup final scheduled for Sunday, July 19th at MetLife Stadium. Don't forget, that's my mom's birthday. Happy early birthday, Mom. Love you. All right, we'll take a look at one stock that calls the New York Stock Exchange its home. Todd, how about Eli Lilly, up 7% on the day, one of the best names in the S&P, reaching an all-time high. Just a few days ago, don't forget, President Trump said Lilly will invest $3.5 billion into a new manufacturing facility near the Lehigh Valley. Shares up 12% on the year, one of the stronger healthcare biotech stocks that we've seen so far in 2026. Yesterday on the JD Durkin Show, I spoke with Sonu Varghese of the Carson Group. I asked him if he sees any underappreciated AI beneficiaries in the market right now. Here's a look at what Sonu had to say.
I think international.
Oh, interesting.
Yeah.
Because we hear a lot about real estate. We hear a lot about the power grid. That's a good one. Talk to me more
We've been
global.
neutral international for about over a year now. And it's not like we've ever bought into the Sell America trade. But 2023, 2024, we were very overweight the US. We pedaled to the metal. We were always overweight equities, we are still. But then last year, after more fiscal spending in places like Germany, even China to an extent, we went, okay, you want to, get at least neutral international, sort of diversifying out of the dollar a little bit. I know the dollar is going up right now a little bit.
Right now, yeah.
But we're neutral international, but at the same time, you have to be careful there. International means there's EM and South Korea and Taiwan too. That's now again AI. So you overweight EM and you're not getting diversified from AI. But if you go to Europe and maybe Japan, that's more interesting with respect to diversification.
Producers, chart 5, please. The market has doubled since 2022. And that's wild. We talk about the time with ChatGPT. And then it's come back on the profit growth driven by both sales and market expansion. If this rally were genuinely just hype, would these numbers look a little bit different?
Now, it gets to your intro. You said, is this real?
Yes.
Right? If it's not real, I mean, what you see in markets, look, profits are real, right? If the market's going up, in a sense, that is real, right? Because people are making money. Now you have to sell out of it to realize the capital gains. But 100% since the end of 2023. So 3.5 years, the market's doubled. 66 percentage points of that has come from profit growth. Only 24 percentage points has come from multiple expansion, about 10 percentage points from dividends, right? What's incredible, that's huge by itself, 66 percentage points. So close to 70% of that return has come from profit growth. You could argue dividends is also profit growth because it's just returning profits to shareholders.
Sure.
So it's same thing. Now, out of the profit growth piece, about 31 percentage points has come, almost half, has come from margin expansion. That's incredible.
Expansion, right?
Margin expansion. And that gets to what happened in Micron today, coming back to the top, right? One person's margin expansion, one company's margin expansion is also somebody else's inflation. So that's why this is a macro story here.
Producer, we can pull up the Micron chart. What a story MU has been this week. How do you think about these big parabolic moves? Take a slightly deviation away from what we were talking about. But if you look at Micron, how do you mentally approach the SanDisks, the Western Digitals, the Lam Researches?
Yes.
You and I were having this conversation a year ago. It'd be about silver. When you see these absolutely parabolic moves in your expertise, what goes through your brain that investors at home might benefit from thinking about?
Diversify.
Okay.
We talked about momentum.
Yeah.
And you mentioned Lam Research is the 5th largest holding in the S&P 500 Momentum Index.
That's wild. No kidding. Is it really?
Yeah, it's a 5th. Micron's right up there. 5th largest is Lam, and then just after that you have AMD and SanDisk and all that. So you see that playing out, and we are playing it out honestly in our portfolios by using the S&P 500 Momentum Index.
So it's interesting. So Micron shares are up about 12% today, but you see the bulls are giving it a little bit of sell pressure. I mean, we're well off our days. Obviously, the market's only been open for whatever, an hour and change, but it's kind of interesting price action more broadly. All right, my man, before I let you go, talk to me about some of the biggest mistakes or misconceptions about this market that you see in chatter on social media. What do you think far too many people still don't quite have right about this market?
I think going back to what we were talking about, obviously there's a lot of hype, and you get that. You need the optimism, but there's something real here. These are actual profits driven by investment spending, driven by stuff that's happening on the ground, driven by data center investment in data centers. And then you need cables, and you need optical cables, you need networking equipment. These are the companies that are making money. If you mentioned Lam Research, for example, right? So that is all real. It's happening. Now, the question obviously is, when does it pay off? Well, that's the part. Even I'm uncertain. I don't know. But there are a lot of things I'm watching. For example, is demand outstripping supply? For now, that's happening.
You hear that, right?
Welcome back to the show. You are watching the special Friday edition of Taking Stock live from the trading floor of the New York Stock Exchange. Mario DiDio joins us now, the CEO of Helium Network, a decentralized wireless network. Mario, great to have you on the program today. First and foremost, for people at home wondering, what is Helium?
Well, it's a good question, of course. So, when you look at the telecommunication industry, right, they're spending billions of dollars in things like towers and real estate. And this is on top of like spectrum, for example. There is an actual pressure of reducing that CapEx and OpEx spend because the model is not sustainable, especially when you see things like the mobile demand that continues to go up with new apps and AI agents that require more data. So Helium is doing for wireless essentially what Airbnb did for hospitality. We are adding more capacity exactly where it's needed, and everyone can participate in this build out because those people are physically close to where the connectivity gaps are, and we can do that with a quality first approach for the carrier. So what it means that thousands of people and companies have already deployed what we call Helium hotspots to add coverage to their neighborhood or their coffee shop, restaurant, conference center, and so on. And millions of people today already use the Helium network to their carriers, like AT&T in the US or Telefonica Movistar, that Helium has relationship with. And they don't even realize it, which is even the coolest part. So if you're coming inside a conference center, or you're entering a coffee shop, and your phone doesn't drop the call and your video call doesn't stop, well, that's a seamless connectivity experience that Helium and this decentralized build-out model is making possible.
So why is decentralized wireless infrastructure the future of wireless itself, Mario?
Well, when you look at the traditional model is more of a 20th century model, is very vertically integrated, where the carrier owns everything. Decentralized means that people who know where the gaps are at the local level can improve that coverage, that can earn from that use, and carriers can use that footprint to expand their coverage. So it's much more a 21st century model, and it's all about shared infrastructure. So it's more cost effective for the carrier. And the future, I mean, we've seen it all over the places with satellites. The future, it's about connectivity across different networks. So you connect from a satellite down into a cellular network and then to Wi-Fi. So Helium allows for all that to seamlessly integrate. And it's pretty exciting to see how the model is evolving in this new era of telecommunication.
So Mario, is this a crypto story, or is it an infrastructure story that just kind of happens to use blockchain technology?
Oh, that's a great question. So, look, for the millions of users that connect to the Helium network on a daily basis, they don't even know that there is a token that drives it. Story that uses our businesses use digital assets as a growth efficiency tool. So, but however, there is independent for things like market cycle, for example, and the usage is real. And we're building this in a way to disrupt the industry. So we use these technologies like blockchain, like quality, and like crypto to create a different engine and disrupt that model while creating coverage which is seamless for the millions of people that use it. So it is an infrastructure that use digital assets to create a value proposition that is clear for everybody, and it's transparent. It's almost magical in a sense.
Mario Didio, CEO of Helium Network. It is great to see you, my friend. Enjoy the rest of your Friday and enjoy your weekend. We'll do it again soon. Folks watching at home, don't go anywhere. A lot more on this jam-packed edition of Taking Stock. Live from the trade floor of the big board. Don't go away. Welcome back to the show. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence you need as you head into your weekend. First up, the crypto majors actually up fractionally at this hour, though Bitcoin just a hair underneath 60,000. Next up, OpenAI reportedly delaying the broader rollout of GPT 5.6. This after a request from the Trump White House, with early access limited to select enterprise customers, explicitly approved by the government. What a story. Finally, the Pentagon quietly updating its targeting doctrine to allow AI to initiate military actions. As long as they're under human supervision, it signals a broader role for AI in future combat decisions. Earlier today, FinTech TV lead anchor Remy Blair sat down with Willie Lee of Suro Capital to discuss the latest in the mega IPO race. Take a look.
Joining us live here at the New York Stock Exchange to discuss private market exposure and the 2026 IPO landscape is Willie Lee, principal at Zero Capital. Willie, great to have you here. Thank you so much for joining me.
Yeah.
Well, the first half of 2026 has been quite volatile, but we got the SpaceX mega IPO, and of course, this morning, OpenAI is in the headlines. So, what do you make of that New York Times report?
Look, I think it's definitely interesting. What's happening, I think, when the bankers pitched SpaceX is this exact idea that it's going to be the big three AI companies going public. What I think is getting lost in the narrative as a part of sort of that sale of the IPO is that SpaceX's core business is not AI, LLM, selling that part of the business. Now, it's something that it could be a part of in the future and be a big player in that. And they're certainly positioned to do that, but they're not there right now. And so I think what people are mixing them up with is that everyone's asking, where's the ROI from AI, LLM spend?
Yeah.
And so people are looking at SpaceX and saying, oh my God, that's not there. But if we're in the private markets, we're seeing OpenAI, Anthropic, all these other private companies who have massive revenue increases year over year. And I think that's where the real story is. You know, SpaceX has this huge infrastructure that they're selling compute for. And I think where they should be grouped is more on that AI compute and infrastructure spends, not AI. And so I think people, and specifically OpenAI, is that's the story and sort of separate, you know, SpaceX from the OpenAI and Anthropic of the world.
Yeah, Willie, you highlight a lot of concerns as well as a lot of issues that we have been focusing on when it comes to SpaceX. But when we're talking about valuation for OpenAI, how are you looking at this, especially on the heels of SpaceX?
Look, I think OpenAI is actually testing that right now with their employee tender. And it'll be interesting because I'm not sure all the employees at OpenAI want to sell shares at, you know, last round valuation. I think the valuation is much higher than that. So I think there's a testing of that right now. And I think what people will be surprised about is the valuations are much higher than that.
And Willie, you are joining me on a day when we're paying attention to artificial intelligence and what's actually happening when we're talking about the leaders as well as laggards, not just for the technology, but also the investment plays. So when it comes to the reality check for valuation, how are you looking at it right now?
Look, I think in the private markets, we are seeing massive revenue increases year over year for some of these companies. I mean, we invested in CoreWeave back in 2024, so 2 years ago. And back then they had RPOs of less or around 15 billion. And so now you're seeing them do deals of that size in a single deal rather than cumulative backlog. So I think people are spending that type of money and it's, you know, it's consummated with the amount of revenue that's also being generated in the private markets. I think what people are really waiting to see in the public markets is some of that look through of the revenue that's being generated in the private markets. Meanwhile, we're seeing massive valuation increases because we have that line of sight and people in the public markets just haven't had that opportunity yet.
Yeah, and I do want to expand on this and get your take on the impact as well as implications for smaller IPOs in the pipeline and what's coming down the pike, not just for the second half of 2026, but also looking into 2027.
Yeah, I mean, so we have Lime in our portfolio. They're getting ready to go public. And I think that it's opening the door to a lot of different players into the space because of exactly what I mentioned, which is that, you know, the public markets are looking for that read through of AI spends resulting in ROI or real revenue for some of these businesses. And so I think you'll see Aura when they go public, Whoop when they go public, Canva, Lime, you know, all these companies who have really benefited from AI and LLMs and being able to innovate and create new products on top of that and generate revenue. I think it'll start to give that peek inside of where that ROI and revenue is actually being generated.
Yeah, and speaking of peek inside, you spend time looking at the management as well as the business models of these pre-IPO companies.
Yeah.
So what do you think is the key takeaway for you and what should retail investors keep in mind?
Look, I think retail investors feel like they're missing out on a lot of the value creation that's happening in the private markets. And it makes sense. I mean, SpaceX went public at a $1.77 trillion valuation. And if you were looking at Google or Amazon back in the day, they went public at much lower valuations, less than $1 billion for Amazon and $23 billion for Google. You got to ride that entire ride up to, you know, huge $4 trillion valuations. I think, you know, people are looking to get access to that run up in valuation. And so that's why, Suro and now going to be Neostellar exists, is, people trying to get line of sight and access to that.
Appreciate your time as well as your perspective here today. Thank you so much.
Yeah.
Welcome back onto Startups, Raises, and Rounds. We now go on Semiconductor, set to acquire AI chip company Synaptics in a nearly $7 billion deal, strengthening its push into physical AI. Next up, the U.S. set to invest $250 million in Robert Friedland's startup iPulse to develop semiconductor tech for geothermal drilling. Finally, startup Protronis AI raising $50 million to expand its simulated digital worlds, helping companies test AI agents in real-world scenarios. And now Money 2020 Scarlett Sieber is back with a whole new edition of Hindsight 2020, where she breaks down key dates in financial history. Take a look.
Welcome back. I am Scarlett Sieber from Money 2020, and this is Hindsight 2020. We're going to rewind the clock back more than 50 years. Let's rewind that back to June 26, 1974. A small group of central bankers form what becomes the Basel Committee on Banking Supervision. There's no public announcement about this. There's no headlines, no sense that this is going to matter much at all. But it quietly becomes one of the most powerful forces in global finance. The Basel Committee exists to answer one question: how much risk should banks be allowed to take? Out of this groups come capital ratios, leverage limits, and liquidity rules that shape banking across borders. Basel doesn't tell banks what to do, it tells them how much room they have to do it. That constraint changes behavior. It shapes how credit expands, how crises propagate, how banks respond when stress appears. Fast forward to today, debates about bank resilience, shadow banking, and fintech regulation all trace back to Basel's logic. June 1974 reminds us that the most powerful financial forces don't trade, they set boundaries. And that is your Hindsight 2020, because in finance, the rules you don't often see matter more than the ones in the markets that you do. Any ideas, things you want us to highlight here? Drop it in the comments below. In the meantime, back over to you.
Next week here on Wall Street, we will have 4 days of trading ahead of the highly anticipated, at least for me personally, July 4th holiday. The June jobs report crossing the wire on Thursday, plus the latest quarterly results from Constellation Brands as well as Nike. Before we wrap up the broadcast, did you all have a great time at the New York Stock Exchange today? Thank you all for being here, and thank you all for watching today and all week's editions of Taking Stock. Enjoy your weekend. We'll see you again on Monday.